and we're looking for signs of strong bullish behavior. Once we get that bullish behavior, what can we do? Well, once we identify it, we can take the trade. Stop loss again below structure, and then we can target our structural highs here. Because we know that if price is bouncing off of the key level, you've broken structure, there's a very high chance we're going to get back to these structural highs here. So traders, you've asked me to share more examples with you of potential trading opportunities, and that's exactly what we're going to do today. There have been some amazing moves this week, and I'm sure if you've just been focusing on the simple process of break and retest, then you should be able to be, or you should have been able to get into some of these trades. I mean, some of the moves this week have been so simple, there's really not much you should have had to think about. If you're just simply focusing on the break of key levels, the push phases, waiting for the exhaustions, looking for the wick rejections and the continuations, then Bob should have really been your uncle. If you find that you've taken trades this week and you've lost more than you should have, then you're kind of rushing things, because more often than not, traders are only going to lose when you're forcing trades. If you're waiting patiently for these trades to come to you, then you're going to find yourself in a very good position to be on the right side of the market, right side of momentum, and get those winning trades that you really deserve. So let's take a look at the markets and see what's been happening. So USD CAD, as I mentioned yesterday, has just been like one of my favorite pairs this year. You know, from year to year, pairs change with their behavior. Some are more volatile than others, some are more better than others, but USD CAD has been an absolute blinder. And to be brutally honest with you, there's just nothing more to say than it's just been absolutely gorgeous. Now, when you're looking at the structure of this market, we can clearly see it's been trending down. Now, what we're focusing on here is the key level where price made the lower high. Price doesn't need to come here to retest this level. Guys, we're just trying to identify what made this low, where did price break to make this low, and then once we understand that, we understand the market's in a downtrend, right? So now we're looking for behavior to continue to support that evidence that we're in a downtrend. Now here we have an area in the market where prices come back to, but not necessarily create a retest, but it's creating multiple wick rejections. And once we identify this, we can start scaling down. We plot in our key level at our high, and we plot in our key level at our low, because what we want to identify is where is price failing to break above and break below. And at this stage, we identify this as a consolidation. But once we start scaling down, what we can start to do is make sense of the behavior. Now, price doesn't necessarily need to be making breaks below structures from a higher time frame perspective. What we need to see price doing once we start scaling down is looking for it to break structural levels here. Now, this is now starting to initiate or identify to us that the trend on the lower time frames is now starting to form downtrends. And as you go to the 15-minute time frame, you'll start to see that we have a structural high, a low at a key level. We're not looking to take a trade yet, but now we have a lower high, and now we have what could possibly be a new lower low. If you have that in the back of your mind and start scaling down to your entry time frame, let's say in the 15-minute in this instance, what we're looking to identify here is the trend down. As you can clearly see, it's trending down. We have gathered all the information that we need from the structural highs, from the overall trend on the higher time frame, which is down, and the behavior now that's starting to form a high, low high, and then potentially a lower low. We're waiting for price to break structural levels here. We have our break close below this level. Now we're looking for price to come back to create those multiple wick rejections. As you can clearly see here, we have the multiple wick rejections. And then for your last final piece of confluence, you're looking for a momentum candle in your favor, or you're looking for price to break structural lows. And as you can clearly see here, this candle closed really strong bearish. And look at this move. Just simply from scaling from our lower time frames to our higher time frames, we can clearly identify why this trade here on USD CAD was an absolute banger. Everything lines up. The break close below structure, pull back into key levels, wick rejections, bearish candles. From a high time frame perspective, we can see here that the market is trending down. We're not making no new higher highs. We're not breaking above the lower high that formed the lower low. We're creating multiple wick rejections to indicate bearish sentiment. And as we start scaling down, we identify areas where price is failing to break below. And then by the time we get to our entry time frame, which you can see here, it's absolutely gorgeous. Now, most traders want to be buying off of this level. Most traders want to be selling here. Most traders are trying to force a trade here with the smallest stop loss. There's no need. Just wait for price to break key levels and then look for your wick rejections continuations. Let's take a look at our second example. Here on pound USD, we can clearly see what the market is doing. We have strong bearish sentiment to the downside, wick rejections to indicate that the bulls are trying to push up and failing. The trend is clearly down. Now we have a key level here in the market where price is failing to break below. Now if we want to take sells, what do we need to wait for? We need for price to break close below this level. Once price break closes below this level, what can we do? Well, we can wait for price to simply come back to this key level to then identify an area where we can take a selling opportunity. How do we do that? Well, you wait for the close, you scale down to your lower time frames, and what are you looking for here? This is a 15-minute time frame now. You're looking for the strong close, break below the level. This is a key level in the higher time frame. Some of you might be asking, well, Rox, are you not worried about this on the 15-minute time frame? Well, no, not really. I'm using the higher time frame confluence to identify the break below the key levels where price failed to close with a body below the level. Previously it was wicks. And then now once I get down to my lower time frame, I'm just focusing on what's happening here. Break below the level, push back into the key level as a retest. Strong momentum candle again. What am I doing? Taking the trade, stop loss above structure, and then going for, let's say in this instance, a 1 to 3 risk reward ratio. And look at this, Bob's your uncle. 2 trades already this week you could have taken. This one was a 35 pip move. This one was a 14 pip move. And all I've simply done in both instances is wait for the higher time frames to break structures or the lower time frames, depending on the scenario, and then looking for the wick rejections and the bearish momentum to the downside. So that's 2 examples. Let's take a look at the third example, which is my favorite of them all. So now we're going to talk about the infamous gold. Now, a lot of traders are really worried about trading this pair, and I totally get that. It's not for everybody. It can be very, very volatile, so sometimes it's best to stay out. But to be brutally honest with you, this pair just moves exactly the same as a majority of them. And if you understand market structure and market behavior, then it's just as easy as anything else. What do we identify here? We identify a very strong downtrend. We identify lower highs and we identify lower lows. Now, once price makes a lower low, what we expect the market to do is create multiple wick rejections to then form what could be a lower high. Once the lower high is formed, then we're anticipating what could then be the new lower low. Now, we have multiple wick rejections here, and we're not taking these for granted. This is 4 1-hour candles. Now, at this stage, if this level's created, we anticipate the momentum to continue down because we're in a downtrend. But if price now starts to break above some of these key levels here where we anticipate the lower high to be, and we have a break close above, then we have to start shifting our mindset to potentially identifying the market as creating a low, higher low, and then eventually creating a new higher high. Now, how do you bring this information together? Well, what are we waiting for? We're waiting for a break close above structure. Now we have bullish momentum on our side. We need to identify where price can come back to as a key level, because if the bullish momentum is continuing up, there's a very high chance that price is going to come back to a key level for a retest. So now what do? We scale down. Let's go to our 15-minute time frame. As you can see here, what do we start to identify? We start to identify a structural low, higher low, and a higher high. If we go to our 5-minute time frame, which is my favorite of them all here, we have a previous downtrend. The brick wall's been broken, price breaks above. We have a key level here where price is showing it cannot break above. So this is a strong key level indicating bearish behavior. But once price starts to break close above structure here, what do we have? We have bullish behavior. And this bullish behavior is indicating to us there's a very high chance price will come back to our structural highs here at 1728.05. So if we clear off some of these charts here and start to take a look at this, we have the behavior on our side on the 1-hour time frame because we've broken above the key level, which is this level here. We have a trend that's forming, which is higher highs and higher lows, and we're patiently waiting for the market to come back to our retest level, and we're looking for signs of strong bullish behavior. Once we get that bullish behavior, what can we do? Well, once we identify it, we can take the trade. Stop loss again below structure, and then we can target our structural highs here. Because we know that if price is bouncing off of a key level, you've broken structure, there's a very high chance we're going to get back to these structural highs here. And as you can see, this is an absolutely gorgeous, gorgeous, gorgeous move. pip range here is 90 pips. The risk to reward ratio here is 2.35, and all we had to simply do was wait for price to break a key level, come back to retest it, give us a strong bullish candle in the direction we plan to take the trade, and all I can say with this one is Bob is your uncle. 90 pips, let's not take this for granted. With all three examples you can see, it's the same process. And guys and ladies, it's only Tuesday and you could have taken some of these trades. So, I hope that motivates you. I hope you're ready just to be a little bit more patient this week. You've got Wednesday, Thursday and Friday. Don't rush the process. Take your time. It's only the second day of the month. 3 days left of this week, another 3 weeks to go. There's a lot to come. Just wait patiently for the markets to break structure, retest structure, and just wait for those candles to push in the direction you plan to take the trade. And I can promise you, you're going to see massive, massive results. Everything relies on you in being patient and staying disciplined. So I hope you enjoyed that video, and if you did, make sure you smash that like button. Subscribe if you've not already subscribed. Turn on notifications, and until next time, continue to trust the process.